Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The Bank of Japan hikes interest rates for the first time since 2007 and scraps yield curve control. The yen falls through 150 versus the dollar. Trader/Fed cut bets as FOMC members gather for a two-day policy meeting. US 2-year and 5-year yields climb to their highest levels this year. Plus, Nvidia unveils the successor to its all-conquering AI processor. But markets deliver, well, a muted response to CEO Jensen Huang's highly anticipated speech.
This is Hopper. Hopper changed the world. This is Blackwell.
So a new era for the Japanese economy, certainly a new era for Japanese monetary policy, with the first hike since 2007, an ending of yield curve control and an ending of ETF bets and buying. We have, of course, Stephen Engel on the ground for us in Tokyo for all the details, and we'll cross over to him momentarily. Let's check in on these markets then as we set you up for your trading day this Tuesday as the Fed starts its own policy meeting, with that decision, of course, on Wednesday, and a focus on the dot plots, the forecasts from those Fed officials. European futures pointing lower by 0.2%. FTSE 100 futures off by 22 points here in the UK. When it comes to S&P futures, still above 5,200, currently off by just 0.1%. Nasdaq futures down by 0.2%. Let's flip the board and, of course, the focus on the Japanese yen. A little softer then in the session on the back of that decision by the BOJ, seen by some in the markets at least as a dovish hike that came through for the BOJ. So we check in on the Japanese yen, 150, currently down 0.8% versus the US dollar. When it comes to the Fed story then, that move that we've seen, yields higher on the 2s and 5s. Year to date, you've seen just close to 50 basis points of moves in terms of the 2-year yield higher. You're currently at 472. Brent in focus as well, continuing to assess the damage to those Russian refineries. Estimates from anywhere between 600,000 and 900,000 barrels taken out as a result of the attacks by Ukrainian drones on those Russian refineries. Currently $86 a barrel, just down 0.2% on Brent. Iron ore back above 100 per ounce, per ton, I should say, $100. Currently 105, currently up a little under 2%, 1.8%. On iron ore. Let's go to the story of the moment then. The Bank of Japan has hiked interest rates, as we said, for the first time since 2007, ending its negative cycle, of course, and removing its yield curve control. Let's bring in Stephen Engel, who's been on the ground covering this story for us throughout, our chief North Asia correspondent in Tokyo. Steve, get us up to date on what has happened, what we know at this point as we lead up to that press conference from Ueda.
Not a lot of surprises, actually. I mean, this was pretty much telegraphed by the Nikkei, the Nihon Keizai Shimbun, and other Japanese media. And then they had a follow-up scoop early this morning, essentially saying that the BOJ was going to scrap the yield curve control. And that was one wild card, whether they would scrap that, tweak it, or whatever. They have decided, as was reported yesterday, to hike interest rates for the first time in 17 years, essentially exiting this negative interest rate policy. So they just didn't hike it by much, the same amount that we expected, by 10 basis points to a range on the short-term benchmark rate of 0 to 0.1%. But by scrapping the yield curve control, which has been in place since 2016, it basically is a momentous occasion in many ways because, again, they're also at the same time pledging to keep their JGB bond purchases relatively stable. And again, they also stated that they're going to scrap future ETF purchases, not as needed as before because of the equity rally that we saw through last year and the beginning part of this year. But the key line really from this statement, and we're awaiting the press conference in a half hour from Governor Ueda to kind of explain some of those decisions. The key statement was they're going to remain in an accommodative policy mode. And the way the markets read that is essentially, at least the Bank of Japan is not telegraphing that there's going to be an interest rate tightening cycle. So there's no indication that there will be further ones this year or beyond. It could be one and done. It might not be. We just simply don't know. And you alluded to the fact that the yen against the dollar has weakened past the 150 mark. That is the main reason why.
Steve, what you've been on the ground, you've been speaking to ex-BOJ officials. What are they going to be looking out for then from the press conference, 3:30 your time, 6:30 our time, from Governor Ueda?
Yeah, just what is the post-yield curve control policy and balance sheet policy going to be? Already they've kind of indicated that they're going to keep JGB purchases relatively stable, but how will that be tweaked and at what benchmark as well? So again, there's a few things that need to be ironed out. As far as the ETF purchases, they're not going to purchase anymore, but will they eventually start selling down those holdings of exchange-traded funds? And again, the number one question, and he's not going to answer it because he's talking about the data that led to this decision as of right now. He is not going to answer the million-dollar question, and that is this the beginning of further tightening? Does normalization mean further tightening down the road, or is it one and done?
OK, Stephen Engel, Bloomberg's chief North Asia correspondent on this historic decision, of course, from the Bank of Japan, the last major central bank, of course, to end negative interest rates. Steve, thank you very much indeed on the ground for us in Tokyo. Let's see how the Asian markets then are reacting to all of this and bring in Avril Hong in Singapore. Avril, what are you seeing then in terms of the BOJ reaction, the reaction to that decision from the BOJ across Asia?
Yeah, I mean, this was a move that was more or less anticipated. The scrapping of yield curve control, ETF buying, a rate hike. It was well telegraphed given the flurry of media reports. But I think, to Stephen's point, it's about how it's going to stay accommodated. This is not a rate lift-off per se. We'll find out, I suppose, as the presser progresses. But the idea that the BOJ is going to keep up with the amount of JGB buying more or less is proving to provide some relief for the JGB futures. We're seeing that spike there. Let's flip the board and take a closer look at what we're seeing across equities in Japan. As we got that dovish hike, it's the sense you get that whatever interest rate increases we see from the Bank of Japan is not enough to cause an issue for Japanese equities, because after all, fundamentals are intact. Corporate governance has been improving. So the benchmarks finding their footing before the close of trade. I want to mention, especially here, though, we're seeing those Japanese financial related stocks that have been doing well in anticipation of this rate hike from the BOJ. It looks like the best might be behind them. They've tended to underperform in previous tightening cycles. Taking the lead in Japanese equities today, real estate sector, that surged 4.5%. The idea that if we are in an inflationary environment in Japan, what do investors want to latch onto? Tangible assets. That's why we're seeing property running up the way it is. Tom.
Meanwhile, the RBA, the Reserve Bank of Australia, holding rates and removing some language, Avril, about potential hikes in the future. Talk to us about that decision, the phrasing that came through from the statement, how markets are reacting to that.
Yeah, the whole came in as expected. What we were watching out for was whether it was going to remove a bit of its hawkish bias, and it did this in its statement when it removed the phrase, the need for further rate hikes. That's what investors latched onto. And this is showing up in the currency space, the Aussie losing ground in the face of what's expected to be a hawkish Federal Reserve later in the week, losing ground against the Kiwi as well. As you know, the yen has been weakening past the 150 level against the greenback. Similar picture on the Aussie cross. But let's flip the board and take a look at what we're seeing as well in the bond space. Bond traders are really liking the sound of what we're hearing from the RBA. They're running higher, particularly on the shorter end of things. That's despite the RBA governor saying that they're not sure quite just yet whether they can rule out those future rate hikes. The markets have really run along with that.
OK, Avril Hong in Singapore with a market reaction, of course, to the BOJ, importantly, and also the RBA, removing some of its more hawkish language. Avril, thank you very much indeed. The other major story for us today, of course, and this week, above and beyond the central banks, is the corporate story and the AI story that is NVIDIA. That company then unveiling new chips aimed at extending the world's third most valuable company's dominance of AI computing. CEO Jensen Huang showed off a new processor design called Blackwell at the company's GTC conference in California.
Hopper changed the world. This is Blackwell.
OK, let's get more then from Matt Bloxham from Bloomberg Intelligence for the analysis on what we've been hearing from the CEO and, of course, this announcement around the Blackwell chip, an upgrade to its processors around AI. Matt, your takeaway from what we heard?
Yeah, I mean, this was a widely anticipated announcement and a kind of essential for the continued evolution of the company's Blackwell chip. You know, about 2.5 times more powerful than the Hopper platform that it replaces. So the B100, that's going to be the new technology to replace the H100. But I think as well as the performance, the CEO is very keen to emphasise the reduced power consumption of this new platform, which obviously every corporate is incredibly sensitive now to their environmental footprint. And so be able to do much more computational processes and tasks, doing them more quickly, but doing them without being so power hungry is incredibly important too. So I think that was an important element too. So yeah, I don't think anybody really heard anything they weren't expecting to hear. But yeah, there was lots of fanfare about how the world is getting more and more complex and computational driven, and that these chips they're developing are going to continue to be, you know, kind of in strong demand. And I think they probably did enough to kind of convince people that they continue to maintain a big edge over their rivals in terms of delivering these things and broadening their market. You know, their big customers are the big data center and cloud companies, and there's a lot more that goes on inside data centers than just the processing. There's connectivity between all these different computing devices, and they're getting into that market in a bigger way too. So they're kind of expanding their addressable market into other ways too.
And it's interesting, as you say, that they're looking to address those energy concerns around AI's energy consumption. We'll see if the analysts latch onto that as well. In terms of the moat then that exists between NVIDIA and its competitors, have they widened that moat with this B100, with the Blackwell, or is AMD and others, are they catching up?
It's hard to say. I mean, my initial reaction would be maybe they've widened it a bit, but, you know, we'll just have to see what happens this year in terms of other announcements. But I think at the very least, I think they're definitely maintaining it. Probably one of the other interesting things we saw yesterday was, towards the end, a new robotics platform, which actually Disney is looking to use. And they actually had two kind of quite small robots that are kind of Disney-themed come on. Yeah, they kind of remind me a bit of some of the small things you saw in the Star Wars movies. And so there's some kind of quite exciting things there. Maybe that's going to open up a whole new kind of debate about this robotics platform, how it's used in the enterprise and the entertainment area too. So there's a kind of a light-hearted moment towards the end of his 2-hour keynote, which maybe will kind of spark some interest from Bloomberg and others, I imagine.
OK, so we look ahead to the developments around robotics coming from NVIDIA as well. Matt, thank you very much indeed with the take there and what we heard from Jensen Huang at that key event around NVIDIA and the launch, of course, of their latest AI processor. Matt Bloxham from Bloomberg Intelligence. Here's what else we're looking ahead to today. Crucially, of course, front and centre for us, 6:30 UK time, 3:30 local time, is Ueda's press conference. The governor, of course, of the Bank of Japan, after that historic decision to raise interest rates from the BOJ for the first time since 2007. First time in 17 years. This will be crucially important in terms of whether or not he gives an assessment guidance on the next steps, of course, for the BOJ after they raised rates, ended yield curve control and have decided to step back from ETF and REIT real estate purchases as well. So that press conference, 6:30, we will bring it to you live with analysis from the experts, of course, throughout that press conference. Meanwhile, Germany, ZEW expectations survey, that drops 10 a.m. UK time. Is that economy, is Europe's largest economy, starting now to turn around? Are there green shoots? That detail will be important, of course. We know the economy of Germany is challenged. Some have suggested there are signs now of green shoots, what that would mean as well for the thinking of the ECB. Meanwhile, the FOMC meeting beginning today, of course. The Fed has started that meeting. They will start later today. The decision, of course, from the Federal Reserve coming through tomorrow, expected to stay on hold. But we are, of course, looking for any potential revisions to the forecasts, the dot plots in terms of rates and rate cuts, with 3 currently penciled in. Do they move that to 2? Coming up, crude prices on the move after Ukrainian drone strikes knock out an estimated 600,000 barrels of Russia's daily oil refining capacity. The details on that story just ahead. And coming up, I'm going to be speaking to Martin Schulz, the chief economist at Fujitsu, getting his view on the Bank of Japan news and Governor Ueda's comments. That conversation, 6:40 a.m. UK time. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Tuesday. Now, let's drill into what is happening in the oil space. Pairing gains this morning after Brent closed at its highest since late October. That's as Ukrainian drone strikes add to geopolitical tensions, with oil trading platform Gunvor estimating around 600,000 barrels of Russia's daily oil refining capacity has been knocked out by attacks. For more on this, let's bring in Bloomberg senior energy reporter Stephen Stupczynski. Stephen, talk to us about the impact then on Russia's refining space from these Ukrainian drone attacks, and how long it's going to take to get these refiners back online.
Yeah, I mean, this is going to be something, you know, when you talk to the analysts, JP Morgan had no doubt, they think that there's going to be 900,000 barrels a day of an impact. But no matter which way you look at this isn't a day's sort of situation. When we talk to people, when you read the analyst notes, when trading houses talk about it, it does look like it's going to be a weeks or months sort of outage. And so that really means that distillates, that's gasoline and other oil products being refined at these facilities, their output is going to be reduced. That's going to have a twofold impact. One, it's going to reduce their exports out of Russia. And also, that could put some upward pressure on Russian, gasoline prices, which is something that the government does not want to happen. That's something that they like to avoid. They want things to be cheap for the folks inside the country. Another complicated issue is, how does crude oil react? You know, we have this risk premium on crude oil rising because the knock-on effect of higher gasoline prices means that potentially maybe crude will have to rise as well. But there is this other view that potentially if the crude isn't being refined, then Russia can just export that crude, which means that Russian oil exports could also rise. And that could be somewhat of a bearish sort of element in the market. But overall, I think the market is looking at this as sort of a risk premium on crude. That's why we saw the big jump yesterday. Analysts are saying that there's this $2 to $3 premium on crude, and that's why Brent is up to $87 abouts, which is the highest since November, basically.
That's really, really interesting detail, the fact that this could actually potentially lead to more Russian oil on the market and suppress prices. But as you say, for now, the expectation is that it's going to continue to push these prices higher. So up 12% on Brent year to date, Stephen. How does it change the thinking of OPEC Plus at all, the developments that are unfolding in Russia? Are we starting to top out on prices? What is your take on a couple of those lines?
You know, I think OPEC Plus, the interesting thing that you have to look at always is that this is a price level that they probably wanted from the beginning, right? I think when they targeted their cuts, and they're continuing their cuts for the next quarter, I don't think they were really worried so much about prices being too high. So I think at this range, you're not dealing with demand destruction. You're not dealing with yet pressure from the Biden administration begging maybe for some relief. So I think in general, the view is that these cuts will at least continue into the next quarter. You could see a continuation after that as well. At the same time, you're seeing some producers like Iraq come out and say, hey, we weren't really cutting to the levels that we said we were going to, so we're going to kind of retroactively reduce our exports as well. And that's also, they've said that recently, and that's also kind of helped add to this kind of bullish narrative in the market. So I think OPEC Plus is comfortable. Once we hit above $90, and there is pressure on consumers in the U.S. and other places, and Asian consumers as well, that's perhaps when you'll see them considering. But I think we're still a little too early for those discussions.
OK, really, really interesting context, important context. Bloomberg senior energy reporter Stephen Stupczynski, as we look at Brent edging closer to that $90 level. Not there yet, as Stephen says, but currently at 86.73. Stephen, thank you. Coming up, Barclays Chief Executive C.S. Venkatakrishnan tells Bloomberg the lender is planning to expand relationships with sovereign wealth funds. More from that exclusive conversation next. This is Bloomberg.
Who would have expected UBS shares to have soared since the bank took over its ailing Swiss rival Credit Suisse 1 year ago? Yet that's exactly what's happened, with the stock hitting a 16-year high in early March. Behind this, confidence in Chief Executive Sergio Ermotti's turnaround of the Swiss lender and integration of the two banks.
I think it's very important for investors to understand how we are connecting the dots between what we said in summer last year and in respect of our long-term plans.
Ermotti's goal is simple: to make UBS the undisputed global wealth champion and take on Wall Street rivals where they have the home advantage. In the US, UBS chief hopes to leverage former Credit Suisse clients in the US and manage their wealth, including those still building their fortunes. But catching up with these American financial giants will take time and come at a cost.
More than 50% of our cost is headcount, and there are duplications, but we try to do it over time.
European banks, including Deutsche Bank and HSBC, and even UBS, have previously tried to crack the US market and had to pull back. But this time, UBS aims to be the one left standing at the end of this round.
Bloomberg Samuel Etienne reporting there on the outlook for UBS 1 year after the lender took over troubled rival Credit Suisse. Talking of UBS, lines crossing from the Swiss National Bank, SNB, in an annual report on capital requirements, saying a review of UBS's systemic capital requirements is needed, saying that stability of the Swiss bank financing needs strengthening, and it says banks need to prepare more collateral for emergencies. We'll keep across this story for you, of course, throughout the next few hours. Lines crossing there on the SNB with this annual report with a focus on some collateral and capital requirements they see needed for the Swiss banking system. And, of course, UBS plays a major part in that. Meanwhile, Barclays seeking to expand its relationships with sovereign wealth funds and private equity giants as it broadens its own footprint in advisory and equity underwriting. The Barclays CEO spoke exclusively to Bloomberg Surveillance.
Previously, in the investment banking side, we were working with corporations. And since then, we still work with corporations in a very big way. But in addition to that, you've got the financial sponsors and the sovereign wealth funds. So the growth of concentrated pools of capital makes it important to have that full relationship with those players in the market.
And later, Brian Moynihan, the Bank of America CEO and chairman, of course, will join Surveillance for an interview live from the lender's trading floor. Now to some of the other stories making news. Bloomberg understands that Fidelity plans to cut about 20 positions in China as part of wider cost-cutting measures. The move could slow the asset manager's expansion in the local 27 trillion yuan mutual fund market. It's planning to slash 1,000 jobs globally, about 9% of its staff across all business lines and regions. Meanwhile, China's top securities regulator has accused developer Evergrande Group of falsely inflating revenue by more than $78 billion in the 2 years leading up to its failure. Evergrande is the defaulted developer at the heart of China's real estate crisis. Chinese regulators have laid much of the blame on Hui Ka-yen, who's the company's founder and former chairman. No criminal charges against Hui have been made public, and his whereabouts are not known. Coming up, we get more details, of course, on the BOJ. That press conference in focus for us today. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The Bank of Japan hikes interest rates for the first time since 2007 and scraps yield curve control. The yen falls through 150 versus the dollar. We bring you Governor Ueda's press conference imminently. Traders slash Fed cut bets as FOMC members gather for a two-day policy meeting. US 2-year and 5-year yields climb to their highest levels this year. Plus, Nvidia unveils the successor to its all-conquering AI processor. But markets deliver a muted response to CEO Jensen Huang's highly anticipated speech.
This is Hopper. Hopper changed the world. This is Blackwell.
OK, let's check in on these markets then as Japan steers itself into a new era with this rate increase to between 0 and 0.1%. European futures currently down 0.3%. FTSE 100 futures off by 23 points. S&P futures down by 0.1%. And Nasdaq futures off by 38 points, down 0.2% at 18,193. Of course, the Fed meeting, the decision comes through tomorrow. Markets then, traders pricing in fewer than 3 cuts this year. Goldman Sachs still thinks they go in June, but of course expectations have adjusted, and you've seen that across the yield curve, with yields up about 50 basis points year to date on the 2-year. Let's flip the board then and have a quick look on treasuries, but also of course the Japanese yen, which has softened on the view from markets that this was essentially a dovish hike from the BOJ. They will remain accommodative. Bond buying will continue even as they scrap yield curve control. 150 currently on the Japanese yen, down by 0.8%. Governor Ueda is now holding that press conference. We expect to bring you live pictures of that. We will keep across all the lines, of course, that cross from the BOJ governor. Let's bring you those live pictures right now as the Japanese yen sits at 150.33, currently down 0.8%. There you can see the Japanese Bank of Japan Governor Ueda after that momentous decision to lift interest rates for the first time since 2007, the last central bank to move out of negative interest rates. Let's bring in now Stephen Engel, our North Asia correspondent, Chief North Asia correspondent in Tokyo, who's been covering this story for us in granular detail. Steve, we had the decision, of course, expected given the press coverage over the weekend with the Nikkei and others. Walk us through what you are expecting to hear from Governor Ueda, what you're going to be looking out for, at least, from the Bank of Japan governor as he starts that press conference.
Yeah. Is what you expect and what you're probably not going to hear. I mean, again, here he is explaining a fairly dovish hike, and that's how the market has read it, especially when it comes to, future rate hikes and its impact on why the yen has been weakening. But I'm just looking through our top live blog as we're following this, as Ueda, dressed in a fairly typical charcoal gray suit with a black tie, is essentially Morgan Stanley among those who are wanting to know what a possible appropriate rate level will be going forward. If right now the situation is exiting negative rates and hiking for the first time in 17 years, but are also remaining accommodative policy, what is going to be the path to normalization? Does it include further rate hikes, a tightening cycle, or is it one and done? We have to listen to him and hear how he explains that.
Governor Ueda, some lines crossing, as you say, confirming, as he's saying, confirming the virtuous link between wages and prices. He says that has been confirmed. And, of course, Steve, as you know, the Rengo key umbrella union coming out last Friday with the update on more than 5% in terms of the wages that came through. We know that was really consequential for the thinking of this Bank of Japan. Ueda saying accommodative policy stance will stay for a while. And as you suggested, Steve, we are unlikely to get more detail in terms of the timing, what that actually means, stay for a while, but no doubt there'll be speculation on that. So Ueda saying accommodative policy stance will stay for a while. The yield curve control, the negative rate served their missions, says the governor. Of course, they've ended yield curve control. They've ended the buying of ETFs. They've ended the buying of REITs. But the view from the market so far is that there has been a relatively dovish hike coming through from the BOJ as you continue to look at softness for the Japanese yen, currently down 0.9%. Steve, when we think about the market reaction, was there surprise? You've been speaking to former BOJ officials. You've asked them about what the reaction to the Japanese yen, the move into JGBs. The expectation that there's going to be massive repatriation of Japanese funds, that seems to have been sidelined, at least for now.
Yeah. At least for now, absolutely. And I go back to the comments that Ueda is making, that they'll remain accommodative for a while. It's like, how long is a piece of string? How long is a while? Is it, again, throughout this year? Is it next year? We simply don't know. And that's why, again, you've seen some reaction on the stock market, whereas property stocks were up and banks were down because banks had gone up because of the prospect of a higher interest rate environment. But now they've sunk back down today. Again, there's no indication at all that there will be further tightening down the road. And that's kind of the big $1 million question right now. How long is a while, and how long will we be in this accommodative period? And again, if he was too dovish, if he is too dovish, does that undermine his liftoff, if you want to call it that, with rates? But again, it's that delicate balancing act every central bank governor has to deal with.
OK, Stephen Engel, Bloomberg's chief North Asia correspondent in Tokyo, of course, giving us excellent coverage of this unfolding story. Stephen Engel, thank you very much indeed. So from one Stephen to another now, Stephen Schulz, chief Asia FX and rate strategist for Bloomberg Intelligence. And let's dig a bit more into the market reaction, Stephen Schulz, to what we've been hearing from the BOJ as we continue to look at live pictures of the Bank of Japan Governor Ueda speaking. Stephen, your view, your take on how the market has reacted to this move from the BOJ?
I think the market basically tells you that they're not happy with what they're getting. As you said, it's a dovish hike. And also we have this story from Nikkei leaked over the weekend. So that also basically anchored market expectations. So the expectation for today's decision is actually pretty high. And we got nothing hawkish, basically, from what we have seen so far. So that's why market reacted. We saw Japanese equities rally. We saw the yen drop. I think that's totally understandable. And also we have to remember, despite we are saying that this is the first hike since 2007, after all, Japan is still easing. This is still easing because they're still buying JGBs, it's still QE. So it's not like they hike by 100 bips and quit QE like in one go. So that's why we see the market basically is expressing their frustration. So the yen will be under pressure. At the end of the day, dollar yen, it's really a yield differential story. The Fed, at the end of the day, will matter more than the BOJ this year.
Really interesting. The Fed will matter more than the BOJ on the back of this momentous decision, of course, from the Central Bank of Japan. We know the Fed, of course, is meeting right now. Their decision will come through, their latest decision tomorrow, with the updates around the forecast and the dot plots, of course, squarely in focus. Ueda saying that they will continue to use short-term policy rate as the main tool. And again, in terms of the accommodative policy stance, Ueda, the Bank of Japan governor, saying that that stance will remain for a while. Bloomberg Economics, the line coming through from their analysis, this is an exit from extraordinary policy. It is not an abrupt shift to a hawkish stance. To your point then, Stephen, talk to us about the longer-term view on Japanese bonds and the yen. Japanese JGBs, the 10 years, a bid in the session today. Yields are down about 2 basis points. The yen is weaker, past 150. As we push out in the months ahead, how do you expect that to evolve?
Yeah, for JGB, it's pretty straightforward. It doesn't really care about today's rate outcome, if you could look at it. And one of the reasons why the Bank of Japan is so comfortable of scrapping the yield curve control is because of the stability in the 10-year yield. So basically, last year we saw that one of the reasons why the 10-year JGB yield has shot to near 1% is because of high U.S. Treasury yield. And now everybody knows that the Fed basically is going to cut next, and U.S. Treasury yield is also being suppressed. So that's why there's no pressure, basically, for the JGB yield as well. So that's why they can scrap it. And as you can see, once they announce it, it did nothing to the yield. So basically, for now, we still expect the yield to grind higher, but very, very gradually towards the 1%. Whereas for the yen, as we said, dollar yen basically is US-Japan rate gap story. So it depends on how many rate cuts the Fed will deliver. So right now, market consensus 3 cuts, 75 bips. So basically, if that materializes, we can see lower dollar yen, but again, very gradually. And we have a model, the fair value for dollar yen is somewhat near 145, 146. So that's probably about it for the downside for dollar yen, at least for now.
OK, the downside, we're probably at the lowest levels for the yen for now. You're looking at 145, 146. And you've talked, of course, essentially about that Fed role. What is the Bloomberg Intelligence view then? We've seen Goldman Sachs adjusting their forecast from 4 cuts this year to 3. They expect to see 4 next year. Where does Bloomberg Intelligence lie in terms of the next steps from the Federal Reserve as they hold their meeting?
I mean, like the base case, probably 3 is reasonable, but actually we see the risk being less than that instead of more than that. Because usually what the Fed does is usually they go slow, but until something cracks, if they see something happening like a crisis or like equity market meltdown, then they will actually cut more aggressively. So it's either less than 3, or if something happens, they will have to go in like 50, 100 bips. But otherwise, we think at best we'll get 3 cuts for now. And this week, the Fed will try to push back market expectation for a quick cut in the first half of the year. OK, Stephen Schulz, excellent analysis from Bloomberg Intelligence. Thank you very much
indeed. We continue, of course, to keep across the Bank of Japan story. Governor Ueda giving that press conference saying that the price target is now in sight, that recent data show that the virtuous economic cycle in Japan is strengthening. We're going to have plenty more, of course, across this story as the Bank of Japan governor continues that press conference. I'm going to be speaking with Martin Schulz. He's the chief economist at Fujitsu. His analysis, his take on this unfolding story is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The latest lines then crossing from Governor Ueda. He continues that press conference after this momentous decision by the BOJ to raise interest rates for the first time since 2007, end yield curve control, end the purchases of ETFs and REITs as well. Governor Ueda saying the accommodative stance will support the economy and prices, not expecting a spike in lending and deposit rates. Financial firms set lending and deposit rates on their own, says the governor, pointing that out. The price target is now in sight, says Governor Ueda, and he sees recent data, he says, is showing the virtuous economic cycle strengthening in Japan. The Japanese yen is weaker by 0.9%. Japanese JGBs, the 10-year, of course, the benchmark is bid, yields down 2 basis points, close to 3 basis points at 0.74. The BOJ raising interest rates from negative 0.1 to positive between 0 and 0.1%. Let's bring in Martin Schulz, then, chief economist of Fujitsu in Tokyo, for the latest analysis on this. Martin, simply your top-line response to this decision by the BOJ. They've gone, they've done it since 2007, the first central bank, the last central bank to end negative interest rates. Your take on the significance of this moment?
It was, wow, finally we are through with it. The Japanese economy has been recovering throughout last year, and now we have policy normalization. That is very, very important for us here on the ground in industry to really move forward.
And Martin, what do you make of the market reaction then? The market seemed to be assessing this as a dovish hike from the BOJ. The accommodative stance, that's being re-emphasised in this press conference. Is the market reaction with yen down and yields, or I should say government debt, JGB's bid, is that a rational response?
It is rational, but it is even more rational on the Bank of Japan side because it is kind of mission achieved. The most important thing for the Bank of Japan when normalizing rates after such a long time was to avoid a huge market reaction. The natural reaction would be, well, the yen jumps becoming much higher, potentially disruptively, the stock market diving with interest rates going up. All this didn't happen, and some people are even disappointed about it. This is probably exactly what the Bank of Japan was hoping for.
How do you see the BOJ then steering policy from here, Martin? Is this one and done? Where do you see the rates ultimately by the end of this year?
Well, this normalization step is a one and done, and this was the most important one. It's a very clear signal. It also shows that, well, some things will have to change in Japan. The Bank of Japan does not want to be way more restrictive right now. All the other central banks are becoming, well, more dovish, are getting out of their very restrictive policies. The Bank of Japan also wants to support the economy that has been slowing quite a bit over the last few months. So no, not many restrictive steps here, but costs for the government will go up in the future. Interest rates are becoming positive again. It means government policy will have to change, and the yen will probably stabilize. It has been weakening too much.
Do you see then, Martin, a repatriation of Japanese funds on the back of this move, and if not on this move, then through this year?
Well, this would really be what would drive the yen much higher. I don't expect it. Companies have been investing overseas. What they are particularly doing is, well, not investing so much actively, but they have been building their operations overseas in their markets, including the US, with major investment, in particular, the incomes they are generating overseas, building, staying overseas. I don't think that anybody is interested in pulling their funds back right now when the yen becomes stronger. I would rather expect more investment overseas, so no big movement in the yen for the foreseeable future here.
Very interesting. You see more investment overseas. Governor Wade is saying that they will decide on the appropriate level depending on the economy. Governor Wade also saying that it's important to keep conditions accommodative. There is still some distance for price expectations to be 2%. On the economy, Martin, how resilient is this Japanese economy to this positive rate environment?
Well, companies, in particular major companies, have been very optimistic. But the economy has been driven a lot by, well, government spending on negative interest rates and the very weak yen. This is now changing. Companies will have to boost productivity. They will have to invest into digitalization. This is what they are doing. And they're sharing their profits, well, with employees. 5% plus among major companies increasing wages. This is unheard of in Japan in a generation. Extremely helpful. The problem is not all companies will be able to do that. Many smaller companies will struggle to adjust.
What do you make then of the balance sheet of the BOJ? So you're talking there about how this is going to break down for various corporations, various parts of Japan PLC. When it comes to the balance sheet of the BOJ, they're not going to be buying ETFs anymore. They're not going to be buying REITs. They're still holding, of course, vast numbers. In fact, they're the biggest owner of Japanese stocks. Do they look to unwind those holdings? How do you see the balance sheet adjusting?
The balance sheet is huge. We are talking here just bank reserves, one-time GDP sitting there in the accounts of the Bank of Japan. Just rolling it over will still be major operations, major JGB buying. So they are still very much in the market. But what is happening is that so far they were earning money on their loans being out there. So on the bank account, on the banking accounts in the central bank, meaning with positive interest rates, they will earn much less. They will transfer to the government at the end of the year much less. So for the government, conditions are getting tighter. Financing their deficit will become more expensive. And this is also what the Bank of Japan wants. It wants the economy grow from the real side, by productivity and not so much by government action.
OK, we have some interesting lines, just updates coming through from this press conference then, Martin. I'll bring those to you right now. The redhead crossing the Bloomberg terminal. Governor Ueda saying it is important to keep conditions accommodative. He also says the pace of rate hikes depends on the economy and inflation. He says markets will determine and decide long-term yields. This also interesting. Ueda saying that they want to mull cutting bond buying at some point in the future. Governor Ueda saying that they can avoid rapid rate increases based on the current outlook. Martin, your take on some of these lines, but also I'd like to fold in your view on the Japanese consumer as well, because some of the data suggested that the consumer is looking a little softer.
The consumption side looks quite a bit softer. People had to adjust. Now with higher wages, of course, this is supportive. But there are many people in Japan, older people, being on fixed incomes. They have been still struggling with inflation, with lower real incomes. So then when this is improving, by inflation coming down, by wages going up, this will be helpful from the consumer side. But what you were mentioning on the corporate side and optimism, this is where the long-term interest rate is being determined, more credit demand. Companies have been investing strongly already, so I wouldn't expect much on that side, meaning the long-term interest rates will go up only very slightly with the economy recovering. So this will not create a major headache for the Bank of Japan anytime soon.
Martin Schulz, absolutely fantastic to get your analysis on this essential day for the Bank of Japan. The chief economist, of course, at Fujitsu, joining us out of Tokyo. Plenty more coming up, including a deep dive on Nvidia, UBS, and a little bit more on the BOJ. Stay with us. This is Bloomberg.
A new industrial revolution. Every data center should be accelerated. $1 trillion worth of installed data centers will become modernized over the next several years. Second, because of the computational capability we brought to bear, a new way of doing software has emerged, generative AI, which is going to create new infrastructure dedicated to doing one thing and one thing only. Not for multi-user data centers, but AI generators. Everything that moves in the future will be robotic. You're not going to be the only one. And these robotic systems, these systems all need one thing. They need a platform, a digital platform, a digital twin platform, and we call that Omniverse. Amazing processors, NVLink switches, networking systems, and the system design is a miracle. This is Blackwell, and this to me is what a GPU looks like in my mind.
The NVIDIA CEO, of course, Jensen Huang, speaking there on the first day of the company's annual AI conference. Just very briefly reflecting on the sales story for this company. They've gone for about $5 billion in 2016 in terms of sales, $5 billion, to estimates of over $110 billion by 2025. That's more than 4 times the level of 2022. And a lot of that built, of course, on the H100 chip AI processors. Now they've launched the B100. What does that do to the sales picture then? Are we topping out at this level, or is there much more to come, as Jensen Huang would suggest, with his major customers, the likes of Microsoft and Alphabet? Let's flip the board and have a quick look at the BOJ then. The story really of the moment when it comes to macro policy and monetary policy on that momentous decision then to raise interest rates for the first time since 2007. But just in terms of how the markets have reacted with softer yen and yields down on GGBs, the expectation and the view that this is a dovish hike coming through from the BOJ. And again, we've been hearing from Governor Wader saying that it is going to be accommodative still. They continue to buy bonds even as they pull away from yield curve control. And so over the next couple of meetings, April and June, the pricing around where rates will be has not changed that much. We'll see if that evolves, of course, in the days ahead. 0 to 0.1% now is the market rate for the Bank of Japan. And let's flip briefly to what we're seeing in terms of the UBS story, because in terms of the market cap there, on this year, since, of course, the deal of the century, as some described it, the market cap crossing 100 billion, as they are the likes of Morgan Stanley in terms of wealth management. That story will be getting more coverage, of course, throughout the day. There's plenty more coming up on Bloomberg TV, including exclusive interviews with the EU Economy Commissioner, Paolo Gentiloni, and the CEO of Honeywell. Up next, it's Markets Today. This is Bloomberg.